Okay.
Hey everybody, Greg Harrelson here with Century 21, the Harrelson Group. Of course, with my co-host Abe Safa, and we're bringing another episode of the Myrtle Beach Real Estate TV to you. It is Wednesday, and as always, we bring data to you, give some commentary on what we believe is happening in the market, in hopes that you can be an informed property owner. So, welcome. Thanks for joining me another week, Abe. I cannot hear you, Abe. I don't know if you are on mute.
I was on mute. Hey.
Okay.
Hey,
Good. I'm glad. I also do not see the record button. I just see the live button now. But we have been recording, so forgive me for that little oversight. But let's just start off before we get into the numbers. Let's start up. I know we got an update on what's going on with forbearance. What's the latest news? What's the latest data on the number of forbearance people that are in forbearance across America?
Yeah. So the most recent number that I've seen was down to 1.7 million people in forbearance right now.
Yeah.
As you remember, we peaked at 5 million people.
Mm-hmm.
So back during the height of COVID, when people were not sure if they're going to make their payment, and the government made that available for people to take advantage of the forbearance period, it went all the way to 5 million people, and people were, consumers were starting to get a little bit concerned, like what's going to happen at the bottom of this? What's going to happen with all these 5 million people? Are we going to see a big wave of foreclosures or short sales? So that number's been dwindling down month after month, Greg, and now it's down to 1.7 million.
Yeah. And I think, a lot of, when the number really peaked at a real high number, there were a lot of people, and I can't tell you how many, if it's 1 million people or higher or lower than that, but there was a significant portion of people that were opting into forbearance who really didn't have financial problems. They were opting into forbearance because they had that option, and they were taking that option just in case they lost their job, they would already have it set up. Just in case they lost revenue at their business, they would have that already set up. So in many cases, like the first wave of people getting off of forbearance, from what I understand, were people that really didn't need to be on forbearance. They were just doing it as a way to reduce some of the risk, their financial risk in a volatile market. But now when it's at this low, in the million range, or what did you say the number was?
1.7.
Yeah, 1.7, almost 2 million. At this point, because there's so much equity in people's homes, it doesn't appear that forbearance will cause a wave of foreclosures. I do believe there'll be some foreclosures, but I'm not saying it's because of forbearance. I mean, we're seeing mortgage companies do more BPOs, getting broker price opinions, and usually that means they're evaluating the value of something to determine if they want to go and foreclose on a homeowner. But for the most part, I just don't see any evidence that the forbearance issue is going to cause foreclosures. Do you see that? Do you agree with that?
Yeah. That was a great point, what you said about the people that were using up forbearance early on. It was more like an insurance policy.
Yes.
So yes, now down to 1.7 million. If you're still in forbearance right now, people that are still in forbearance right now, those are people that actually need it, right? Yeah. So yes, 1.7 million. When you look at the overall inventory of homes for sale right now in the entire country, ironically, we're at 1.7 million.
Yeah.
So there's 1.7 million homes for sale. There's 1.7 million people in forbearance. Many of them are going to go to foreclosure, but because inventory is so low, I think it's going to be okay. I think the market's going to absorb it. I don't see I think we'll see a little bit of a spike of foreclosures just because they haven't been foreclosing. So we've got a bottleneck of foreclosures. So I do think there will be an initial rush of those, but I don't think it's going to be significant enough where it's going to make a dent in the inventory right now. Yeah, it's just inventory is just so low at 1.7 mil.
And foreclosures, because the owner of a property is a bank, hence a foreclosure. Because the owner of the property is a bank doesn't necessarily mean that prices go down. Right. It's when a significant portion of the active properties on the market is owned by the bank, is when there's a risk of the market going down. So I can assure you, if I was to receive a call from a bank today to list the property in Carolina Forest, residential home, and the bank owned the property, unless the property was in really bad physical condition, if it was in just average condition, I would price the property the same as if I was pricing it for the consumer, unless the bank says, Greg, I want to liquidate this in the next one day, because I'm going to sell it in the next week anyways. So the bank is likely going to get about the same price that a regular homeowner is going to get, because the inventory levels are so low right now. So even if we do see some foreclosures come on, that doesn't mean prices start going down. We're going to get a lot of calls from investors. Hey, I want to know if there's any foreclosures, and then we set them up and let them know about all the foreclosures that come on the market. What's probably going to disappoint them is they're going to think that they can make, offers on a $200,000 property. They're going to come in and offer 120, thinking the bank's going to be that desperate. And the reality is the bank's going to get multiple offers at their ask price.
No question. No question.
At least right now. Something could change in the future. If there was a lot of foreclosures, that could change. But right now, we believe that's what will happen first.
No question in my mind as well. Banks are in a business to make money, right? So right now, the way the market is, the way the inventory is, they're going to price it at market value. Now, what causes banks to really start dropping the prices? One of two things. If they're carrying so much, like back in 2007, 8, right? If they were getting 50, 60 a week that they had to unload, they wanted to clean their books out. But there's not going to be that kind of mad rush of foreclosures. So they're going to be asking market value. So yeah, I'm in 100% agreement with you on that point.
Yeah. Well, let's shift gears and let's take a look at the numbers, because I believe the numbers are going to show stability. They might even show that a little bit of bounce up and down. So let's take a look.
I want to pull up this one chart first, because last week you and I talked about diving a little bit deeper into the condo market and talk about some condos that have in the past maybe been lagging or behind the market, right? So I ran a list this morning. This is I ran a list of how many condos are active per building. And then I ranked them in order from highest to lowest. So in the entire market, these buildings have the most amount of inventory available for sale. So I took out all pendings. This is actually active. So this is stuff that you can buy right now. And this is how they rank in order of highest to lowest. There's not a whole lot out there, Greg. I mean, these numbers are low.
Yeah.
So we were looking for anomalies. We were looking for buildings that might be lagging or struggling and not keeping up with the market. Example, Landmark Resort. If we would have looked at Landmark Resort about a month or 2 months ago, there could have been 30 units on the market for sale. So now they're catching up to the market. Bridgewater in Litchfield is catching up to the market. A lot of these buildings are catching up to the market. There's really not a whole lot of inventory out there, even in these buildings that have struggled in the past.
Yeah, and I remember this. The last big boom is as inventory. Let's just say that the A+ buildings, B+ buildings, and C+ buildings. I won't try to name which building would fall in which category, but let's just say the more popular buildings, when the inventory goes to zero, the buyer still wants to buy. So the buyer may then expand their search criteria and start looking at buildings, maybe in an area that wasn't their first choice, maybe a size that wasn't their first choice, but because their first choice doesn't exist, then they start buying in another category. And so Landmark would be an example. At one point, I remember Landmark having 40 to 50 active condos for sale. And then all of a sudden, I remember it going down to maybe 10. And then I remember, not long ago, I saw it go up a little bit. And it's like, oh, wow, interesting. Landmark is increasing. The inventory is increasing in Landmark. And now we look at it and it went down, and it might be as low as it's ever been right now. And so, but again, there was one time 40 to 50 units for sale. Now there's 8 units for sale. And a lot of this are buyers are buying the inventory that's available. And because maybe their first choice, other buildings, there was no availability, they still want to make an investment. So then they start looking at what is available. And now we're seeing that eat away at the inventory, even in some of these buildings.
Yeah. So look, if you look at the numbers, Greg, the first column is the number of units on the market for sale. The second column is the median days on the market of those units. So like Magnolia Point, only 6 units in all of Magnolia Point. That's a huge development.
Yeah.
That the Magnolia Point's going crazy right now as far as prices, as far as sales, and how quickly you'll see those 6 units. The median days on the market's 22. So these are all new units that hit the market recently, and they're all, you know, it's sellers trying to get current market prices because the market prices are so good.
Yeah.
So this isn't necessarily a list of dead properties.
No, not at all. I mean, listen, in any one of these properties, you know, these users are likely to sell. I mean, Bridgewater has the most, but Bridgewater is a higher price point. You know, it's in Litchfield, by the sea, great community. You know, the HOA fees are a little bit higher. So just naturally, there's a small buyer pool. Landmark are condos in the $100,000 range on the oceanfront. There's a lot more people who can qualify for those versus a $500,000, $600,000 condo. So all of those things also are going to play a little bit of role, you know, as to days on the market and inventory levels.
Absolutely. So let me pull up our regular weekly numbers that we look at. So single family homes, 67.22%. So up a little bit from last week. You know, with 46.73 on the market, 31.41 pending, you know, but it's been stable. It's been stable for some time now. You know, we were slowly increasing inventory, and that pending number was slowly dropping, but it's kind of been stable the last 3 to 4 weeks. Very little change, which is a good sign. The good thing is the market's still really hot. Inventory is still very low, and new properties that are hitting the market are still selling fairly quickly. You know, we just have some stale inventory that's sitting out there right now on some homes, and they're kind of, if you look at those, if you broke it down, some of those homes are sitting a little bit longer. But the new stuff is selling fairly quickly still.
You know, I think a lot of people don't understand, and we probably see it more than most because we're looking at these numbers all the time. People expect and that the stock market moves every so many seconds, right? They just see it go up, down, up, down. You can just see that on, you know, any news channel or any app that you might, financial app that you might be looking at. And a lot of people don't understand real estate's the same way. Like if we were to, we could take a snapshot of these numbers or pricing numbers, close prices, sales prices. We could take a snapshot every hour, and we would likely see movement every hour, just like you would see in the stock market. Now, the swings are not as significant, and it doesn't change every second. And the changes really don't usually matter in small increments of time because people are not turning and flipping the properties, you know, every you know, multiple times during the day. But hopefully our viewers and our listeners are seeing that, hey, the real estate market moves every week. And what we want to do is we just want to monitor the trends and see kind of, is there consistency or is there a new pattern? Right now with those, the last slide, we saw that it was going, that number went down for a few weeks and now it went back up. That's kind of what markets do.
Yeah, that's exactly right. So yeah, I mean, 1 week change is insignificant. What we're looking for is a pattern. What we're looking for, have we been increasing week after week in inventory, which kind of tells us that we might have peaked already and the market's starting to shift on us. Resale single family homes, it went up. It finally broke 60% again. It was below that. It got to 58, I think, last week, or 59, somewhere in that range. It went back up above 60. So that decline of week after week that we've had, all of a sudden it peaked back up a little bit. Again, insignificant right now. You know, this doesn't really paint a picture that the market is still super hot. Homes are still selling real quick. You know, new construction, 73.76% of the homes out there under contract, still holding very strong. The condo market has been extremely strong. You know, 65, almost 66% of all condos on the market right now are under contract. And we're seeing it. We're seeing it off the oceanfront, and we're seeing it on the oceanfront right now too.
Yeah.
So oceanfront condos, super low inventory right now.
Yeah, I'm definitely letting people know that this is just, if you're going to, take advantage of the seller's market, right now is an unbelievable time. Of course, I don't have a crystal ball. Maybe in 4 months, we're going to say, oh my gosh, the price has doubled. Not likely, but sometimes, I always say, and I've heard this and I repeat it a lot, is we will never know when the market is going to go down until after it's already gone down.
No question.
We never know when it's going to go down until it's after. We'll always know after the fact.
It's hard to pinpoint exactly when the best time to sell is, but when you and I, we sell a lot of stuff in Barefoot, River Oaks, Magnolia. We sell a lot of condos through there, and like right now, Barefoot Resort. Let's just take Ironwood for some reason, for example. A 2-bedroom unit, you can get $200,000 for it right now.
Amazing.
It was 140 a year ago. Even actually maybe even earlier on this year or less than a year ago, that could have been 140. So I mean, if you're not selling, it doesn't make a difference. Just hold on to it. It's a great property. But if you've been thinking about selling it all, I think this is a really good opportunity. And like you said, we don't know what's going to happen a year or 2 years from now. Can it keep going up? I doubt it, but it's possible.
Yeah.
But all I know right now is at $200,000 for a 2-bedroom unit, you've got to be at least considering selling it if you bought at a much lower price, or if you're not using the unit anymore.
Yeah, I agree.
So non-oceanfront condo, we just talking about Ironwood, 72% of those are under contract. Oceanfront, almost 56% of those are under contract. So not a lot of inventory, a little bit over 340 units, I think, in the entire market available for sale on oceanfront condos. And then when we look at land, roughly the same number, just under 21%. So not much news there, still holding strong, pretty stable, still getting great prices on pretty much across the board. Yeah.
Well, that's great. So I feel like I'm as a real estate professional, helping buyers and sellers throughout the days like you. I feel like what I'm experiencing working with buyers and sellers is very consistent with the numbers that you're sharing. In other words, our buyers are struggling because they're having to deal with multiple offers. Our sellers are loving it because they're having to deal with multiple offers. But it's not across the board on every single property and every single price point. I mean, we get a home in Carolina Forest, we get a home in Arrowhead, communities like that, residential communities. Yes, we're probably going to have multiple offers, assuming that we priced it somewhere in the fair market value range. But there are a few times where, there's some things surprising us where we put something on and it takes a little bit longer. But as of right now, it's a seller's market. And I feel like it'll be a seller's market all year, to be honest with you. I just can't fathom anything happening that's going to reverse that so quickly. It may soften a little bit, but a reversal is just, I'm looking for those signs just so I can be prepared. I'm not looking forward to seeing anything that's negative, but I always want to keep my eyes open so I can be prepared as a professional, as a business owner, and help our consumers. But right now, we're just not seeing anything.
No question. Seller's market still, it'll be a seller's market for a while. Definitely through the end of the year. That's not even a question, but maybe even into 2022.
Yeah. All right. Well, hey, if we can help any of you, of course, I'm Greg Harrelson, and this is Abe Safa. These are our cell numbers down here. Feel free to text us, email us, call us. Let us know how we can help you. We as I say always, you don't have to wait to call us until you're ready to list a property or buy a property. No, we want to earn your business by being a great resource. So anything we can do, any information we can provide, we just hope to help you someday in the future. So please reach out to us. Thanks a lot, Abe.
Enjoyed it, Greg. See you.